today the holdings are above the price. So there's been a lot of demand soaking up supply, yet the price has not exploded yet. When Asia comes into this thing, and they're just getting started, when they come into this thing, we can expect a lot higher prices. This will explode.
At goldsilver.com, we have a price match guarantee, free shipping, and global storage options. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com.
Hi, this is Mike Maloney, and I'm joined once again by Ronnie Stoffele of Incrementum AG, and they just came out with their latest In Gold We Trust report. Ronnie, how are you doing?
Hi, Mike. Good seeing you. Thank you very much for having me.
It's excellent that you're here. Before we get started on your chart book, because every one of these gold reports has a tremendous amount of information in it, and your charts are awesome. But is there any comments that you want to make on the European economy, the American economy, or the global economy before we get started?
I think we forecasted inflation to run rampant in November 2020 when we put out the special report on inflation, and we were ridiculed. And now actually I'm feeling quite similar when it comes to our economic forecast, because from my point of view, a recession nowadays should be your base case. But still, if you have a look at consensus views on the economy, basically nobody is really seeing all the weakness that we are currently experiencing. So from my point of view, we are already in a stagflation, and that's why we chose the leitmotif stagflation 2.0 for this year's our now 16th annual In Gold We Trust report.
Excellent. Some viewers won't know what a leitmotif is, but if you listen to Wagner or something like that, each character will have their own little tune, and that tune follows them throughout the entire performance. And so the leitmotif here is just the tune of the economy. This is the way things go. It's the melody that it's making. So the leitmotif you've got right now is inflation.
Yeah.
Okay. So let's take a look at your chart book here. There's you've got 43 pages, so there's probably about 38 of those are probably charts here. The first one is just a table of the performance of gold in a bunch of different currencies going back to, it's this entire century, so thus far. So just give us a little up, because one of the things, people think that gold investors are these lunatics a lot of times. They think they're a fringe crowd, and it's been the best performing asset class of this century, precious metals, with the exception of cryptos. But cryptos, remember, started at zero, and it's pretty easy to have some spectacular performance starting at zero. We'll see how well they do from here on out. I think there's still quite a bit of room to run in cryptos. But gold is something that has a history that goes back thousands of years. And, you can track it, you can rely on it, and you know that there are certain periods of time whenever the economy and currencies get abused, there are these certain periods of time where gold lays in wait and then catches up. And we're in one of those right now, and we have been since the beginning of the century. So tell us about this and what your conclusion is on this first table here of gold's performance since the year 2000.
Well, Mike, this is from my point of view, this is just the strongest case for gold, or let's say against fiat money that you can make. And from my point of view, and I think we both agree, it's not the price of gold that is rising, it's just the purchasing power of various currencies that is constantly falling. And I think that last year in 2021, most people were a bit disappointed about the performance of gold. They expected much more, but we shouldn't forget last year we saw, I think, 62 new all-time highs in the S&P. So there were big opportunity costs from equities. Then we saw that crypto stole the show. Then we saw that the whole world believed this transitory narrative. And we saw a very, very strong US dollar last year. So in euro terms, gold was up 3.6% last year. And in euro terms, for example, gold is up 8% since the beginning of the year. So for investors over here, gold was actually really the best performing asset probably in a year where not only equities, but also bonds and especially crypto really enjoyed enormous volatility and were down significantly. We've made new all-time highs in euro terms. We've made new all-time highs in Japanese yen terms. I think the Bank of Japan is really kind of the poster child when it comes to monetary madness. So I think people should not forget that we are seeing enormous strength of the US dollar. The strength in the US dollar acts as a little bit like a wrecking ball for financial markets at the moment. But in many other currencies, in fact, in most other currencies, gold is doing perfectly well since the beginning of the year. So therefore, I think, as a gold investor, I think, we shouldn't be too greedy because we should manage expectations when it comes to gold's performance. Gold's job or its role is not to make you rich quickly. Gold's job is to protect and preserve your purchasing power. And I think that gold is doing this job very, very well.
Well, it's doing that and then some, because it is making people rich. It's making them rich not very, very quickly, but sort of slowly and methodically. I want to point out to the viewers, take a look at this chart. You've got the US dollar, the euro, the British pound, the Aussie dollar, the Canadian dollar, the Chinese yuan, the Japanese yen, the Swiss franc, and the Indian rupee. So you got 9 different currencies here. And then take a look at the amount of red on this chart versus the amount of green. And then scan down some of these columns and look at the amount of green that is double digits, way out. And remember that during a lot of this chart, there was no inflation happening. So these double digits are real. And then on top of that, you look at the average, and it's 9.2% per year for all of these currencies combined. For the US dollar, it's 9.3%. But when you compound that out, I'm going to put up a chart here in the video of the gold's performance versus the S&P 500 from the year 2000. And the S&P 500 is up 200%. Gold is up 550%. Best performing asset class of this century is precious metals, with the exception of cryptos. This is number one. And people still consider it, a lot of people consider it a lunatic fringe investment. If you have a certain percentage of your portfolio in the precious metals sector, you're just going to do better during these cycles. A lot of investment advisors will recommend 10%, but it's better to have 20 or 30%, or like me, where the vast majority is precious metals. I've way outperformed the normal investor. So let's go to the next chart. What's the next chart that you would like to show us?
Well, I think it's interesting to have a look at chart number, what is it? 8. So page 8, which shows the investment demand. So ETFs, exchange traded funds. And from my point of view, we are primarily asset managers. We are managing investment funds and private wealth for us, it's important to see really where the flows are going. And if I talk to institutional players, to pension funds, to high net worth individuals, to private bankers, and so on, it's really interesting to see that so far nobody really cares about gold. Which is really astounding, because the
Right.
first quarter was really weak. Let's not forget, it wasn't only equities being down significantly, but also the bond market. So for a classical balanced portfolio like a 60-40 portfolio, that was basically the double whammy. And first quarter, most of those portfolios were down between 8 and 10%, and the second quarter is also a disaster. So I think that many asset allocators at the moment really have sleepless nights, because, what can you do in this environment? So I think that many are reconsidering gold. And I think that institutional investors' demand is really some sort of the marginal buyer in the gold space. And as you can see on this chart, this shows the ETF flows and the price of gold. Well, actually, it's most of those asset allocators are very pro-cyclical, so they only buy into the ETFs when the price of gold rises, and they sell when the price of gold falls. And we saw last year was tough. It was a weak year, especially for ETF demand from the United States, while Europe was stronger and also Asia was kind of stable. And since the beginning of the year, we are seeing some inflows, but I think as soon as gold hits new all-time highs, I think that ETF demand will really pick up significantly, because, as an asset allocator at the moment, you need a better defense in this environment. I think it's a extremely fragile environment. I think that we shouldn't expect this U-turn by the Federal Reserve to happen very quickly. I think we'll see one more or two or three more legs down in the equity markets, and probably also a further surge in yields. So I think we have to become accustomed to the idea that we are actually in a big bear market, and that this lack of monetary stimulus, but also fiscal stimulus, of course, has an impact on markets that were mainly fueled by cheap liquidity. So therefore, I think that many asset allocators will reconsider buying gold, and I think this will really make a difference.
Yes, I see something else in this chart too that I want to point out to the viewers. It was up until about 2009 here, right after when the global financial crisis really got going. This was the vast majority of all of the ETF holdings was North America. And then you see Europe start to explode. And now Europe, you get to the end of this chart, and Europe is almost as much investment now as North America. But take a look at the light green area, Asia, and now other. Asia is just starting to get on board. Mm-hmm. And one thing about these ETFs, this is taking precious metals, and putting it in a vault, and basically sort of taking it out of the system. This is one of the big price drivers is the ETFs, because they do gobble up so much of the supplies. Now, you've both of these scales start at zero. So you've got the amount of holdings. This is in tons, and you've got the price of gold on the other side, and both of them start at zero. I do want to point out to the viewers that the price was above the holdings back in the 2011, 2012, when gold was peaking back then. And then today, the holdings are above the price. So there's been a lot of demand soaking up supply, yet the price has not exploded yet. When Asia comes into this thing, and they're just getting started, When they come into this thing, we can expect a lot higher prices. This will explode.